Good morning all, hope you're doing okay, you had a nice weekend and we're back here on Monday. This is going to be a quick video because it's just the COT data, it doesn't need to be necessarily long, and we can see a Euro FX positioning to the downside. So I think what's going to happen after the risk event on the FOMC, we're going to see this play out and we're going to see Euro weakness and dollar's going to remain fairly strong as we can see, okay? So currently what's happening, we could be building positions up in order to short, and at the risk event will sell off. So there's the EU, let's put an EJ, and what I think might happen, we might be getting across, which would indicate a sell on EJ. So we'd look for shorts on Euro Yen if these two cross, and then we would hold that particular trade, okay? So that's going to be a risk off sign, okay? Let's look at Aussie, and you know, we went up but sort of went down a little bit, so it's a bit sort of sideways chop on the Aussie. Nothing really to say there, no cross expected. Take Aussie off, put on the pound, and there, so that's the pound yen just being very choppy, and it's mirrored, which is really interesting. So currently a little bit more long than they are. 2,000 contracts, just more long than the yen. So I'd probably avoid pound yen for that reason. They're just too close. There's no particular strong cross there. And I can quickly look at gold actually, because that was in free fall and it is in free fall. Alright, so remember that. If we continue going how we're going, we're going to break this zero line, which we haven't done in years. So be careful with gold. Take gold off, and then we'll look at Kiwi, and then we'll look at Swiss. Yeah, sideways, not really doing much at all, nothing to comment on there. And take that off and look at the Swiss, and I expect this is going to do pretty much the same. Yeah, we're within that sideways chop. Do remember, if you're trading the Euro USD, we're technically quite bearish. The level where I'm still looking to short is at 104.15. It was 104.30 last week, but obviously price, you know, it evolves over time. So as we evolve over time, which is obviously this plane, this axis here, this is time, this level of resistance is going to get closer. And as we get more sideways, we're going to hit this resistance. So if we do go sideways, then it's simply going to be a sell at 102.79, 103.31. So we're going to hit some resistance inevitably, and it's going to be a short, and that will tie up to the COT data. So looking to short around here, and if price goes sideways, which it possibly might, then it's just going to be a sell at the resistance, okay? And if we ever do break this pitchfork, then it's going to be a buy, and then, you know, we'll do that. Okay, so just a quick one. Have a great day, and I'll speak to you guys tomorrow. Remember to trade safely, and we might be fundamentally risk on if we look at the risk calc as well. So that's going to help cross dollar, and it's going to hurt the dollar because it's regarded as a safe haven. So just trade safely. Know where your exit is. The daily pivots are great, so you can use those, and you can access them on your search tool as well on the Google Sheets.